The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good. Billy Ray, feeling good. We'll start out the day with this chart of the German DAX, folks. Boy, what a beautiful AB. It's a 4-hour chart. An absolute perfectly symmetrical AB equals CD. You just can't ask for anything better than that. If you take a look at the second chart that we're looking at, which is the FTSE, you'll notice on this one you have a head and shoulders pattern. Both of those patterns are, so far have been valid. Whether they break or not, remains to be seen. So we've got some very, very wild volatility, folks, here. And I think nothing makes it any more clear than what we're seeing here in the gold market. I want to get this up here. This was pre-market, of course. Let me get this up here. We had this beautiful head and shoulders pattern yesterday. The market went exactly up to the 78% level at 1813.5, came all the way down, and I thought we were going to have some pretty good support there at 1805, and we hit 1805, and folks, this thing took off like a rocket. I mean, just like it was never going to stop going down, and by golly, guess what it did? It went all the way back down and went back down. It went up and cleared. Let's just get this up here. You'll be able to see it here. Went right back down to the 61% retracement there at 1801, hitting 1798, and then took off, and now it's up. Now, this is a very bullish thing for the commodity price index, if it is in fact the case. Now, silver is not following well, but the gold is still acting, relatively well. That's mainly, what you're looking at. The one that's the most interesting to me, and I have to share this chart with you because it's from one of our younger traders here at TFNN, and he's working with the E-mini with the Russell contract, and you'll notice here the 61% retracement right there at 2283. The actual number that we went short was at 2278, so it was like 3 or 4 points away, but we almost made a double top there, and he had sold that double top, as you can see, with that 61% retracement. His stop was at 2287, so he was risking about 7 points. And believe it or not, this thing with the stock market going absolutely nuts to the upside in the NASDAQ, and then also with the S&P, reversing, going from 4357 to 4383. I mean, those are big things, but the actual Russell itself, it was really quite amazing. Look at the profit objective that this 7-point risk, gave him, and that's what it's all about. It's not how much money. Oh, shut the front door. Just a minute. It's not how much money you make. It's how much money you don't lose. And so he had a really nice move on that. But the thing is, he did the pattern correctly, and you don't know which ones are going to work and which ones aren't. Folks, all I know is I've been doing this for a long time. I've seen all this stuff before. The one thing that we could always count on in this business is just like Bernstein and Woodward. Follow the money, and that's what we're going to do here. If you'll remember, I want to show you I'm going to walk you through a tiny bit of history here. Hold on just a second here so we can take a look at it, and we'll be able to here. All right, this is the, hold it, let me get this up here. This was the margin debt as of June. Shut the front door and raise her in. Sorry, give me a break. Hold on. Sorry, guys, just a second here. Okay, here we go. This was the margin debt as of June the 1st. That's where it was, the spark margin debt. Okay, now what I'm going to do is I'm going to update this with the compliments of Mr. Twentyman, who was kind enough to send this to me last night. And when I saw it, I was shocked because this is really an amazing picture, folks. If you can see here, look at those red dots. Those were tops of major bull markets. And we're now 2 standard, how we love the standard deviation by looking at the Floor Trader's Handbook, but we're at 2 standard deviations now where we are right now. Look at that. We are back to where we were in 1999, 2007, and here we are into this move right here with all this. This is money, folks. Now, I spent some time yesterday setting in for Tom O'Brien on his show, and I got 3 emails from some of his friends and listeners and saying that I was full of baloney. I complimented them on their astute acumen on picking out who was smart and who wasn't. And all I was doing was just trying to show them that, yes, these markets are going straight up right now, but what goes up must come down unless Mr. Newton is wrong. And I don't know when he's going to be wrong, but someday, maybe not in my lifetime. But boy, the thing is really out there telling it, oh boy, please be careful up in here because, hey, look what they did with the NASDAQ today, how crazy it was, folks. It drops 140 points and comes back 160 points. That's a $6,000 move in a matter of a couple hours. That's usually not good. As we look at that pattern here that we talked about here in the NASDAQ, we'll get this up here again because I believe this is the one that is going to be the one that people will go back and say, oh, well, who knows? This was the one that didn't work. It went up forever. Yes, it did, and it might. But this is where we are statistically. The odds favor. Well, it's not that. What is it? Pasteur said, chance favors the prepared mind. And that's all I'm trying to do is to prepare you for some of this volatility that may or may not be coming. That's all I'm trying to do here. I have a really cool chart here on the NASDAQ. You'll notice here the ABCD pattern structure. We're up in that area right there. We just hit it just a little while ago. So that's telling us that not all these markets go up forever. If you remember, folks, we had a market that was going straight up. The lumber market was going straight up for weeks and weeks and weeks. We went from 1,700, folks. We have a 600 handle on lumber now, folks. What happened to all the lumber that was going to be used for trading in for gold bars? I mean, it just changes. The only thing that doesn't change is the S&P and the NASDAQ. They go up forever. So you just buy and hang on. That's all you have to do. And you'll be a happy camper at the end of the day. That much we're assured of. Now, the other one that we needed to talk about today that was another perfect setup that we had all ready to go. It was just acting absolutely beautiful. And here's one. This was the euro. We had a real nice situation there that we would be buying at the 618 or the 786. We're risking $200 on that. Ended up we lost, I think, $200, and then it emergently took off. Someone said, can you take a look at August Hogs? Just initiated a short ABCD. I saw that picture earlier today, Mr. Bo, and the reason why, give me a second here. It will only take me a second to take a look at this. Hold on just a second here. Hold on. Hogs, it's with an H. Yeah, I forget that. HEQ1. All right, give me a second. Bear with me. Since you were kind enough to win the prize here, let's get a look at it right here. Yep, we're right at the 382 as I recall, Mr. Bo. So hold on just a second here. And we just spot on hit it, Bubba. It might not work, but boy, give me this one and I'll take it every time. Hold on just a second. Be a second. I'll take a break here and we'll get back with Bo here and the little piggies. And we'll be right back. Amen.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave. Sign up for the Opening Call risk-free today.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500-plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, we were talking about the little piggies, and the August hogs have made a ABCD pattern right at the 382. Now, hogs traded about $4, say $480 a point. So your risk on this is only about $200. This is a very, very low risk trade, in my opinion. If it goes up more than a half a cent, there's something certainly wrong. But all the things are there. Like sometimes they work, sometimes they don't work. Folks, the one that not very many things surprise me, honest to goodness. I mean, I've seen everything in these markets through the years, but the one that has surprised me the most than anything else is this one right here on the euro. The fact that we could go only exactly sorry about that. I get that last one up there. But you'll see the fact that we could only, we had the high on this thing was 2283 and the fib number was 2279. I mean, my goodness, I had never seen one that was that close. The reason why it's important is the Dow Jones rallied 400 points higher, the NASDAQ 200 points higher, and the S&P 30 points higher. And yet the Russell couldn't get up. Now, I know there's a lot of bifurcation in the market and stuff, but boy, that's amazing to me. Speaking of bifurcation, on the 14th of July, which is going to be tomorrow, you've got to sign up for Basil Chapman's 2 webinar series, the 14th and the 28th of July. Believe me, folks, I can guarantee you 100% that you're going to get your money back. Plus, I mean, it's lots of plus, but he knows what he's doing. He's very, very good. He's very informative, and he'll follow through with you for a couple of months, I believe. So it's really worth it if you want to increase your education. I highly recommend it. I certainly do. Okay, let's move on to a couple others that are also interesting that we want to take a look at. Someone's asked me the question, is the gold market, just a minute, time out here. Is the gold market, we have Mr. Z on the line. John, how are you?
Good morning, Larry. Thanks for taking the call. Let me not interrupt that thought. You were just mentioning something about gold. Why don't you finish that thought, please?
Well, they asked the question someone asked me, is the bottom already in gold? And I believe if we clear 1822, yeah, it's probably the case, but we've got to do that. And then I will say, yeah, that's probably the case. And I'm a little concerned that silver keeps lagging, but, I'm still looking at it. But you have a question about Christmas corn. What can I help you with? If I can.
Yes, sir. speaking about corn and beans in the past 2 weeks more than usual, just for full disclosure's sake, I went through the weekend flats, and then when prices did not dive on the Globex Open Sunday night at 8 p.m. New York time, I rebought both. And held them through the World Agricultural Supply Demand Estimate report yesterday at noon. My question is, where do you see these going? Do you suspect important lows are in? And if a low is in, how far do you see them rallying, please?
Well, John, if the low is in, I know we had a low of around, I think at 5.13 or something like that in the Christmas corn. Now it's rallied over 30 cents. The odds are, because this is still early, so I'm not saying that the low is in, but there's a high probability that it could be in. And the reason for that is we passed the 4th of July. So we're, halfway into that growing season, and so there is a possibility that we could have a pretty good move. And beans have moved up well, but I do want to, since you're on the line here, we have to give a real tip of the hat yesterday to David White, because if you remember, it was the day before yesterday. He posted this bullish wheat chart with which is the spot wheat. And you notice here, this was exactly at the 78% level, and wheat has had a monster move, I think over 45 cents here in the last 2 days. So when these patterns work, they work really good. And that tells us that there's probably a bottom in, John, but I still have to wait. I want to see a really clear ABCD on the downside, that on a correction move on a half-hour chart, then I'll have something that say I can look at it. But right now, it's in the middle of the zone that I can't tell whether. That's why I'm not doing anything with it. So I hope that helps.
It does help. Just for full clarification to your listeners, David White's Gartley buy the ABCD at a 786 support level. That is a price chart for an ETF sponsored by a firm called Thinkorswim. And that particular ETF has a combination of different Chicago Board of Trade wheat contracts. So it's not specifically, for example, the September Chicago wheat contract. It has, I think it has a September, December, and even July of 2022 wheat. So everybody understands precisely what that is. Not saying anything about that beautiful ABCD pattern at the Fib 786. Larry, could I ask you, you answered my question on the corn market. Could you kindly share whatever shorter-term chart you were working with today or last night on that D's corn, please?
Yeah, I think I can pull that up, John. If you give me a second here, I'll just got to get up here. It'll only be a minute. Just give me 1 second here.
I appreciate that, sir. Yeah.
No.
I don't that John, question. I'm curious to see precisely what patterns you're looking at. Of course, I'm doing the same and coming up with my own conclusions, of course, but I always find it helpful to look at what your eyes are seeing. So thanks in advance.
I want to get this up here for you. This is where we were, and we missed it by a little bit here. What I was looking for, John, let me get this up here. By the way, I don't know how you got through today. Al told me today the lines were so they were so filled that they didn't what they look at. Anyway, you'll see here that I was looking for a potential for a giant ABCD down there at around 492. We only got to 508. We missed that by 16 cents. But the real easy buy was on the 11th, which was, I believe, what day was that? That was Sunday night. Yeah, Sunday. Well, that's when you bought it. Sunday night, it had a little bit of a pullback. There was rain, and so the market was reacting pretty good. The fact that it was due to be 15 cents lower and it was 4 cents higher, that was the best place to look at it. Now, what we've done so far, and this is why I have to respect these numbers, because, I don't know much about the fundamentals, but we just hit about 5 minutes ago, we hit the exact 382 retracement at 546. Now, that to me is very, very important. Now, we're at 542 right now. If we can pop up above that, And if we can pop up above that, then you're going to get into that gap area up around that 572. And any ABCD pullback now in that Christmas corn, I'm going to be a buyer. The other thing, if you look at this, let me draw this in so the folks can see this, because we had a little 3-drive pattern that was forming there, but it didn't quite get to the price that I wanted to get to. So I missed that. But what I'm going to be doing now, the fact that we hit that 382 retracement to the tick, and this is a half hour. We've hit it twice in the last hour. I think we got a shot. Hey, thanks for stay with us. Stay with us, John. I want to ask you.
We'll do. Thanks, Larry.
Yeah, you bet.
Are you having fun trading the markets, but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Okay, we're back, folks. We're talking with Mr. Z. He's been trading for well over 30 years, and he certainly knows what he's doing. John, do you, from memory, are there any particular times that you can remember where things you just absolutely never forget? I had someone ask me an email to explain these two particular times. Do you remember anything specific? What I'm talking about was like 1972 when we were starting the Russian grain robbery. There was a terribly bearish soybean report, and I was at Conti Commodity, and Ivan Auer was on the Squawk Box, and he was saying, "Oh, we're going to be lock limit down. We're going to be lock limit down." And then about 20 minutes before the open, now there's some selling coming into or buying coming into the far out months, and then about 5 minutes to go, he said, "We're actually moving up a little bit here, so we might open only down a little bit." And about 30 seconds before the market opened, he yells, I can't say the prerogatives. One was the F word, SOB was another one, and he said, "They're going to open limit up," and they didn't trade for 5 days, and that was with a bearish report, but it was the Russian thing. Do you remember anything like that? Because I have 3 or 4 of them that I'll never forget, that because I've seen everything. This is what we're seeing now. I've seen this stuff before, but I just wondered, you've had a lot of experience. Is there anything that you remember about that you'd like to share? I put you on the spot here, but if you can't remember, it's no big deal.
Yeah, no, the answer to your question is, Larry, before first addressing any specific, I've always looked back when I'm trading. You know me, I'm always looking for the next intermediate term move. And then if I see something with a setup and I start to get profitable, I attempt to hold the position and milk the trend to the maximum possible. And of course, I never fully succeed at that, but that's my objective. And in going through that process, particularly in these grains where, growing weather is such a dominant factor in dictating supplies, I always go back and look at what markets have done in the past and what the key drivers were. As far as this year is concerned, just a couple of things I'll highlight. First, we had that. We had a very dynamic extension of the rally phase in corn and beans this year between March 30th and the May-June highs. And 2 things were at play there. Lots of stuff going on, but 2 dominant things that are not typical. One was that March 30th planting intentions report shocked everybody. The shock was prices had risen and farmers had not responded in kind with planting many, many, many more acres. They're planting more than last year, but everybody who's thinking about economics was thinking, gosh, high prices, farmers are going to plant fence post to fence post. They did not. That's number one. Number 2, weather turned really adverse in April in Brazil, which really it didn't destroy the second corn crop down in Brazil, but it did cut it by the estimates, the actual data is not yet in, but the estimates are that the crop is 15 to 20% smaller than what people had guessed merely 60 days prior. So fewer acres, that March 30th report, the Brazilian adverse weather, those were the drivers that got things hot and lathered. So here we are. We've made highs for the year thus far. They're behind us thus far. Corn and beans, both the spot contracts in both made those highs in May, and we're lower than those now. The USDA data, and all they're doing is working with estimates and trying to, put forward a best guess as to what the supply-demand balance will look like going forward the next 9-12 months. Bottom line there is the supply-demand balance currently seen is very tight. In other words, if there's a snafu with supply going forward, and that can happen with weather between now and Labor Day, or if there's any pickup in demand because of likely adverse growing weather somewhere else on the planet, things are tight enough that prices could easily rally 10, 20, 30%. But it's incumbent upon those 2 things, and I don't any guess that I have on those factors next 60 days, of course, is worth what you're paying me for, so I'm not even going to mention. But okay. Those are the dynamics looking forward the next 60 days. And like I said last weekend, I went into the weekend flat because the weather was rainy. And Sunday night, when we didn't have a gap lower down, I bought in the first 10 minutes Sunday night, and that was just the plan. If we open flat to slightly higher, that's what I do. And we've moved away from those lows last week. Of course, that proves nothing, and hence my calling you to ask you the question where you saw corn possibly going. So perhaps we're two blind squirrels just looking to the future, so we'll do our best.
We'll try to find the acorn if we can, my friend. Listen, thanks for calling in, Mr. Z. We appreciate it. You bet. Buy a lottery ticket, buddy. You've already been lucky today once.
There you go. Bye now.
Okay, folks. All right, we're back here in business here. The gentleman that sent me an email asking me about things that that I never forget, and that thing with the Russian grain robbery was really big because I was just a young trader at the time, and that's what took me up to the 7 figures. Of course, I gave all the 7 figures back, but that was part of my learning experience. But the big one for me was in the spring or early summer of 1976. I had been pushing the soybean market pretty heavily. And I just left Eli Lilly, and there was a report that came out that was so bullish that no one could even believe it. In fact, the quote on Reuters, I wish I would have saved it, but I didn't. And that is, the only soybeans that you're going to see will be in the Smithsonian. That was the original quote. There was another quote like that about 15 years later when soybean meal was so low that one of the big guys on Wall Street said that the only use for soybean meal would be on the replacing sawdust in the country and western bar. That was original, and it rallied $400 a ton. So when you see those things, you have to be really scared of. When I saw that, I started writing orders to protect my position because they said the market was going to be up the limit 4 or 5 days in a row. I had written all the orders, and there were a lot of orders to write to sell 1 tick below the previous close on Friday, and this was a Monday. And by golly, they were due to be limit up, and then the same thing like with the Eisenhower, the call came out, well, there's a little bit of selling, there's a little bit of selling, there's oh my God, they're only going to open up slightly higher, and they opened slightly higher, and boom, limit down 3 days in a row. And that would have taken about half of my profits, I think. So, but anyway, that's all I do. I pay attention to what the market's trying to tell me, and that's it. We'll be right back. 877-927-6648.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, getting back to the my setting in for Tom yesterday on his show, I just wanted to show the patterns to the folks, and I'm seeing danger signs, and I've been doing this a long time, and to me, my experience is worth something. I know it is to me, but anyway, many of these patterns, I just posted one in here. This was the rally high before the Big Depression started in 1930. There was a 3-drive to a top pattern, but the next one I wanted to bring to your attention, this was the stock market for the Nikkei Dow. Way back into December of 1999. You notice that December 29th, that was right before New Year's Eve, and we were going to be in the very first money show was to be in early January. I was in California, in San Diego. You can see that little arrow there. You can't see the 3-drive to a top pattern, but it was there. Anyway, the market is broken down, and you'll see what we're doing now is we're rallying up. And what we've just done is we've just completed, and it's hard to believe that we've done this, but we've just completed a huge ABCD pattern on this pattern. We'll just get it up here so you can take a look at it. I'm just showing you these patterns because I've seen them over and over again. They have characteristics that you think you're never going to see again, but you see them all the time, and that's really why I was doing it. Now, I had like 3 people, sent me an email saying, I'm being overly cautious, that there's no reason for the market to go down because of the fundamentals, and they're probably right. All I'm doing is following the flow of money and the fact that we've got this record margin debt like we've never seen it before. We've got the households are 41% in the stock market, which is there's total complacency out there. And you can see that, transform in the market because it doesn't take there is no bearish news that will make the market go down. I mean, we have a 5% inflation for a quarter here, and they are, that was taken to the market as to be bullish. Well, and it probably is. I don't know. But you gotta be careful. That's all I'm trying to tell you. And it's about maybe it's time to bring in the old burro and ride him out into the sunset one more time. Okay, we're also seeing a little bit of divergences here in the advanced decline line. I've already talked about that. These are some of the other things that I brought up, and I'll be checking those because if we have some more. Yes, she called them 3 little Indians. Bill is saying that Linda Ratsky, she called it 3 pushes too high, but she called it 3 little Indians a long time ago. I mean, at least 30 years ago. I've known her 30 years. I mean, that's not my pattern. That pattern belongs to H.M. Gartley, Harold McKinley Gartley. I mean, that's where I got all these things. The only one that I can probably put my name on is the Gartley or the butterfly. But as far as the 3-drive pattern, that is what his name, Lindsay called it 3 peaks in a domed house. Jerry Favors, the same thing. All you're looking at is patterns that repeat, and it all gets down to one thing that we always talk about, and that is the fact that it's all AB equals CD. Find the ABCD, just like in the hogs. Maybe it won't work, but look at the odds that you have in your favor. You see that's what your whole game plan happens to be. Now when you add the ratios to it, that gives you a little bit more of indication or valid. That's the edge, folks. The edge is the ABCD. You better work at stop. You finally stop watching, Bo? That's right. I'll tell you. In fact, is if you're day trading, one of the biggest problems that people have when they're trading is they're watching too much stuff. And believe me, your mind's going to pick up stuff that your mind shouldn't pick up. So plan your trades at what you want to do, okay, and stick with those. Don't worry about the other stuff. I mean, if you put the hog trade on, Bo, the first thing you should do is go look at the euro or the Swiss franc or the Deutschmark. Well, they don't have Deutschmarks anymore. The euro, silver, gold, pick anything. But don't look at the hogs because, believe me, Bo, now this is between you and me. Everybody else don't listen. This is for Bo. Bo, this is only for you. The market really doesn't care, Bo, whether you're looking or not. I can promise you that. So don't look at it. That's the main thing. I'm not in the trade. I haven't put it on or anything, but my guess is it'll probably meander around. You'll know on the close whether it's going to work or not. Ideally, what you'd like to do is to see it pulling back a little bit so you don't have to worry about it overnight. But if that's the case, pretty much what we're watching here. Now, the other thing that you've got to mention, the news that's out there, you think the fake news is bad and what's going on and all the other stuff. I mean, we have more fake news in our markets than all the political and social stuff combined because that's all they do. Everybody's got an opinion. So I have an opinion that this is a time to be nervous. Other people say, hey, this is a time where we're melting up, and they might be right, and right now they are. So all I'm saying is what I see. That's basically the bottom line of what I'm looking at here. I'm right occasionally, but never in doubt. Anyway, that's what stops are for, is to keep you from getting into big trouble. So let's remember that as we walk through these, meander through these things of what you call. But it's very important here on the gold, folks. I mentioned that Mr. Z asked if it was a big move. I don't believe it's a big move until we clear 1822. And the reason why I say that is twofold. One is the silver usually is either going to be leading or running neck and neck with gold, and it's not. It looked like it was going to go today, and boy, it gave up the ghost really fast. And then, silver or gold came back and made a 78% retracement. I think it's trading around 1812 now, but it's got to get above 1822 in order to move higher. The reason why that's important is because the 382 was back there at 1818. So if we can break above it after having two $20 retracements this week, then it's got a chance. But until that happens, I think we've got to see more to the downside, and that's what my game plan, happens to be. Now, like I say, I'm I'm never in doubt. Let's put it that way. Often wrong, but never in doubt. I think that was the quote to take a look at it. I wanted to bring that chart up here because I think this is another one that's very important of where we are in the markets. You'll see here the people that are invested in the markets. It's higher than we were by a lot in December 1968. Folks, it took the market 17 years to take out that high from December 1968. That's when the Dow was trading around 1,000. The March of 2000, you'll see where we were and look where we are now. And this is already a week old, a number of people that are already in the market. And that's a very high figure, 41%. We have not seen a figure that high before. And that means there's a lot of people exposed. And when you look at the margin debt that's out there, this is the scariest chart of all. You think that NASDAQ chart is scary. This is the one that you should be worried about if you're long stocks. And I'm just going to play like the Pied Piper and get my little harmonica out. But be careful of this one, folks. You've got a lot of people that are out there that's a 3-drive pattern also that are borrowing money. And, that's the first money that gets taken off the table. And you know how that's taken off the table. They shake the tree really hard. Probably going to be wrong, but I just want to alert you to the fact. That's all. That's the main thing. By tomorrow, folks, we got Tim Bost is going to be our guest, and we have to have some wonderful gifts for him because of the fact that we've got he's had that Zeus factor thing. We've got to really press him on that because, boy, was he spot on that. That'd be a straight-up move starting July the 7th, I believe, with an 81% probability rate, and boy, it has gone straight up in the S&P since that time. By the way, I'm going to remind you again, sign up for Basil's show, folks. The 14th and the 28th of the month, worth every penny. I promise you it is. 877-927-6648.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave! Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of The Trader's Edge, heard here at TFNN.com.
Okay, folks, we're back, and a couple people have asked me about the crude oil market. Folks, we're just hanging up here at just testing that 78% level again, above $75 a barrel. I think it's going to have a little trouble up in here, but there should be major trouble between $75 a barrel and $76 a barrel, which is the 78% retracement level. But we came off of it pretty good. We hit that number, backed off $1.50, and then we snapped right back. So that's the main thing. So I'm not of the camp that it's going to make $80 a barrel, but people are talking about that it could do that, and I have to give them respect. However, the old Abe Lincoln quote, "I respect your opinion, however wrong it may be," and believe me, that's what opinions are for. Everybody has one, and they usually smell. Let's move on to some other things that we need to mention here, and that is about the Treasury bond market, folks. We decided that the action before early this morning, we decided that we've been in this now for 5 days. It's had a very good correction. We're down about 3 handles from where we sold it, so we decided it would be best to take our profits. Of course, I didn't know what that CPI report was going to be. They went slightly lower after that, and here again, there was a market that should have been hammered, really hammered with the CPI number, and what did it do? It rallied. So that's the main thing. So keep in mind that you got to be able to use stops in these market, folks, or you're going to get in big trouble because of the fact that it's going to be, volatility is going to increase. I mean, you already see what we're seeing now, but you're going to be able to see this. We're going to be, it's going to be very, very interesting. So that's the 10-4 to keep a close eye on. Don't miss tomorrow's show, folks. We've got Tim Bost on the line. And gosh, did he nail those July 6th and July 7th numbers. If you ever wonder why some of this astrology works that it does, I mean, that was really something with the statistics that he did. I thought that was, it was really great. So we'll see what goes with that. Maybe I'll have something new for us tomorrow. See you all tomorrow, folks. On the flip side, live every day in an attitude of gratitude, and may God bless.